Thank you all for joining in. The webinar will begin in a few minutes. Good afternoon to all the investors present in today's event. Selling a stock is equally as important as buying a stock. Our Chief Investment Officer, Mr. Sunil Damania, would guide us on how to make an informed exit from the stock and reinvest in another performing stock. Towards the end, he would also be answering to some of your questions. Over to you, Mr. Sunil.
Thanks a lot, Suprit, and very warm welcome all of you. Wish you happy Navratri. Today is a Navratri, the first day of Navratri. So, why I'm doing this webinar? There are two reasons. One reason is that when I did first time this webinar, a lot of you people missed out, or some of you wanted to revisit, again want to listen to this webinar. So that's why I'm doing it again, number one. Number two, I think it's also critical for you to understand the way you have your entry strategy. Equally, you should be having your exit strategy, because ultimately, for how much money you can take home from the equity market is a function of what kind of exit strategy that you have. And all across the world, when you talk to the big successful investors, they have a clearly defined entry as well as exit strategy. They know when to enter and they know when to move out, either from the particular sector or particular company, or rebalance their assets allocation to the various assets. Now, something similar retail investors should also have, and that's what I'm going to discuss about it. So spend half an hour with me today, and I can promise you one thing for sure. It will open up your eyes. It will make you much more better investor. And number three, it will make you aware. You will be self-realizing that where you are going wrong at this point of time. So please give me half an hour, very, very undivided attention. And it's for your benefit, I'm saying. It is not for my benefit, I'm saying. So it is your benefit, I'm saying. Please listen to me what I'm saying for next half an hour. And after my presentation, if you have any query, any question, or if you have any disagreement to what I am suggesting, please feel free to ask me and I'll try my level best to satisfy with you my answer. Okay, so here is the ABC of exit strategy. The reason why I put the name ABC, because in fact it's not ABC, it's A to Z. Because I'm going to give you 26 parameters or a pointers that will help you when to exit either from the stock or from the market or from the sector, or rebalancing your allocation within your assets allocation within your total overall assets. Okay, so let me begin my webinar with this disclaimer as usual that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance is no indicator of a future returns. So let me begin my webinar with a simple. So my webinar is going to be very, very simple. I'm not going to complicate with a lot of jargons and so and so. Simple terminology, simple gyan that you people can digest, understand, and relate to it. And if you find it useful, then please start following from today itself. Now, I have done many road shows before this COVID-19 hit us. Okay? And then I'm doing many webinars. And one common thing that I've always found with most of the investors is that investor will have buy strategy. So they will have some kind of a screener to run कि ये कंपनी में promoters का pledge नहीं होना चाहिए, borrowing ज़्यादा नहीं होना चाहिए, debt to equity इतना नहीं होना चाहिए, so and so forth. These all parameters are there. So maybe you may not have put it down on a piece of paper, but it's there in your mind. What kind of a company I want to invest in. So it's very clear cut in your mind. So you have a buy strategy. But have you ever thought, when I will get out this company? So when you buy a company, have you ever thought that when you would be, what will force you to get out of this company? What will make you think to exit from that company? Never. हम लोग बाय करने के लिए बाय कर लेते हैं, सोचते नहीं हैं कभी उसको बेचना है. And that's when either we book profit too late or we book profit too early. And sometimes we hold on to a loss-making companies forever. Like some of you may be holding Suzlon Energy in your portfolio. Some of you must be holding Yes Bank in your portfolio. Some of you must be holding 1% beverages, Wakrangi, so and so forth. The reason is very simple, because we don't have an exit strategy. Had that clarity of thoughts is there in your mind, you would have made an exit, the name I gave you long back. But since you are not having an exit strategy, and it's not your fault, I'll tell you, there are many, fortunately, I have a privilege, or maybe you're fortunate, you can say also, that I have been talking to various fund managers across the country, am I right? And of course, across the world. And one common thing that I've always found between the successful and not so successful fund manager, even some of the fund managers don't have an exit strategy. They don't know when they will get out of that company. And they will give you, when you ask them, their answers are a little vague. They are not predefined. And once you don't have a predefined, probability is very, very high. Either you will get out too early or too late. And sometimes you may continue to hold that company for many, many years. I'll give you a very classical example. I don't want to name that AMC. I don't want to name that fund manager. But this fund manager has invested very substantial amount in NTPC. They have been holding this company for almost 8 or 9 years or so in their portfolio. The NTPC did not give any meaningful returns for that. The reason is very simple. They could not muster the courage to get out of that company, because they don't have the exit strategy for that company. And due to that, the schemes are underperforming. Okay. So ask a very simple question to yourself. Do you have an exit strategy for the sale? It is no. And due to that, and our approach is always very little ad hoc, hota hai, chalta hai attitude. See, we want to make a lot of money from the equity market. So our return expectations are inversely proportionate to our effort that we put in. We want much higher returns from equity market, but the amount of efforts we put in to get that return is very, very low. Now imagine, I kept, and in fact, I was explaining someone yesterday, my friend's kid, and I was explaining that if you really wish to make money in the equity market, you need to be serious. You can't take a very casual approach and say, okay, ठीक है, किसी ने टिप दे दिया, ले लिया, and then forget about it. That's not the way you can create wealth in the equity market. Of course, some can create wealth, but that is more of an exception than the rule. That's an exception, not a rule. So you need to have a predefined. There is a one. I'll draw some lessons from very great epic that was written by Maharishi Vyas, which is about Mahabharata. In Mahabharata, there are two characters. One was Abhimanyu, and another one was Arjun. So, and you know what happened to the Abhimanyu. Abhimanyu knew how to enter the Chakravyuh, but was not aware about how to exit from that. And he got killed on the battlefield, as per that book which has been written many, many years back. The same way, Arjun knew on the same battlefield, Arjun knew how to enter Chakravyuh, and he knew also how to exit from the Chakravyuh. And he emerged as a victorious in that battlefield. Now, something similar, I would suggest you need to understand. There's a great learning from that. The learning is that if you have your entry strategy in, but you don't have an exit strategy, probability is very high that you will become an Abhimanyu and you will get killed. Killed in the sense your portfolio will not perform. On the other hand, if you have your entry and exit strategy, probability is very, very high that you will become a Arjun of the stock market, and hence your returns from the equity market will very, very high and strong. And not only your journey would be a function of only when the market does well, you will have a consistent wealth getting journey from the equity market, even when the market is sideways or market is going a little bit downward. Okay, so please make your exit strategy. After this webinar, you will go back to your drawing room, you will go back to, or you will give yourself 10-15 minutes of your time. You will jot it down either in a piece of paper or on your laptop about your exit strategy. And please keep refining that over a period of time based on your own learnings. What I'm giving you is a pointer. You may take some, you may not take some, the choice is yours. So now the problem is another. I know most of the experts in the world will give you only the buy. Do they ever come and tell you when to exit? Of course, Market Mojo does that, but I'm talking about the normally. No experts basically, even if you happen to listen to someone on TV channel, that person will come and say, buy so and so. Will he ever come and tell you, okay, I had recommended so and so company on so and so day as a buy. Now the time has come that you should make an exit. The answer is most probably no. And then you are basically on your own to decide when you should exit from that company. So I'm giving you some pointers today that will help you to decide on your exit strategy. So there are 16 pointers I'm giving you at the company level. When you should exit from the company. 3 pointers I'm giving you on the sector level. When you feel that sector is overheated, and maybe it's a time for you to get out of it. And I'm suggesting you 7 indicators which gives an idea that market is little overheated, and hence probability of that is very, very high that it will correct. And if that happens, maybe you should revisit your assets allocation strategy to decide how much you should be parked now in the equity and in some other assets. So please listen to me very, very carefully. First, I'll tell you company level, then sector level, and then market level. The same order I'm going to maintain in my presentation. So let me start with the company. So the number one, best time to exit, from a company when everything is going right with that company. Everything. And I'll give a classical example of that. So, and in some of the places, I'll give you some example. Some of the places I will not give you example. You can draw your own conclusion based on that. In 2011, ITC could do nothing wrong. 10 साल पहले ITC could do nothing because Deveswar say Rao could do nothing wrong. Am I right? That MD and chairman. Everyone was gung-ho about ITC. And had you invested at that point of time, your return in last 10 years would have been very, very abyssal, very, very low. Same way in HDFC Bank in 2019. And I distinctly recollect, and I wrote one blog which is available on our website, marketsmojo.com/blog, where I talk about, people used to say, Hira hai sada ke liye, and 20% growth hai HDFC Bank ke liye. That kind of a advertisement people, and someone would say, 3 things are certain in life, okay? Someone has said 2 things, and then someone basically modified that quote and said 3 things. So death, tax, and the growth in HDFC Bank. And when you see this kind of a hero worshipism in the equity market, probability is very, very high that all good things are already priced in that company. And due to that, company will and may underperform going forward. So that we observed in ITC since 2011, we saw something similar with HDFC Bank since 2019. Both these companies have underperformed. Okay, these are simple pointers I'm giving you. You don't have to have a rocket science. The only thing you need to keep your senses little open. Your ears, your mind, your eyes should be open to pick up whether this everything is going right. That means a high chance this company will underperform going on. Another classical example I'll tell you. Of course, I have not mentioned this. You must have heard about Eicher Motors, the company that makes famous Royal Enfield bike. Am I right? And there was a meme that used to go circulate on the social media almost 4 or 5 years back, that had you not bought a Royal Enfield bike and had you used that amount to buy shares of Eicher Motors, you could have afforded today Mercedes-Benz. This is I'm talking about 5 years back. And when I saw this kind of a message, I thought there is a hero worshipism is happening. It's a time to get out. And you will not believe Eicher Motors in last 5 years has not performed only. Why? Because all good things are already there in the price range. So remember, when you see this kind of things happening, now be wary. That is a time for you to make an exit, not the entry. But unfortunately, what I've observed that people will make an exit at that point. So they will get carried away by the noise that is there in the market, and that noise may be by design by someone so that he can make an exit and you can get in. And you can provide a very good exit to him at your cost. Okay. So pointer number 1. Let me go to the pointer number 2. And the pointer number 2 is when promoters start making a very tall claim about their future performance. It's a first sign that I will not be comfortable with. In other words, this company is making, see, why someone would make a tall claims? Maybe the reason is that he wanted the share price to go up. Why would he want share price to go up? Because someone else want to basically then make an exit. So I always see a danger sign. So when someone basically promoters make a very tall claim about the future performance, I get little scared. Then I will say, is this this company is making a statement or the complete industry is making a statement? Is there actually a fundamental change that is happening, or there is an out of thin air? This guy is making a very tall claim. So this is what I would look at pointer number 2. Let me move to the pointer number 3. When promoters come more often in the media, and I've seen this is a very classical sign that all good things are pricing. It's a time to make an exit. Why would promoters should come or the management should come in the media very often? The focus should be on the business. So I love the company that rarely comes to the media. Of course, you can come to the media when you declare your numbers, but if you come very often and you become very, very media friendly, I'm afraid you should start taking out of that money from that company. I do that very religiously. The moment I see a promoter coming or management coming very often and giving interviews after interviews to various media, TV channels, newspaper, magazines, so on and so forth, it's a sign that I must make an exit. So pointer number 3. Let me move to the pointer number 4. When companies' performance improves much better than the industry, this is especially in a mid and small cap. So what happens when the sentiments are good, each and every promoters or the management get tempted, especially from the mid and small cap, to inflate the top line and the bottom line. Why? Because they also want to attract the attention of the investors. So they will come out with very robust growth in the top and bottom line. And that happens, I get really scared. That means this company started playing to the gallery and it's time to make an exit. And don't take my words for granted. If you came to this kind of an incident in last couple of years, you will realize that no one else is making that kind of a obscure margin, and management will come on media and justify that we are unique, our processes are different, that's why we command better margins, so on and so forth. I personally believe this is nothing but all humbug story that the promoter wants to digest digest this kind of a story, which you should not. Please get out from that company the moment you see that the company started reporting. It's like, just, of course, I'm not giving any pointing to one particular company, I'm just giving you a pointer kind of a stuff. Suppose in automobile sector, each and every company reports degrowth in the sales volume. Only one company declares a growth. Then I would really get a little curious, right? Why would that company should particularly this one? I will go more deep and dig into it. And if I find that it's nothing which is looking visible, maybe it's a time for you to get out. I'm just giving you a point. It is not exactly I'm referring to auto companies. I'm just giving you an idea. Pointer number 5. When there is a frequent change in the key personnel in the company or independent director or an auditor, it's a serious case of a corporate governance. And what I've observed, and you will look at this, the company that have created a lot of wealth for the investors are those companies where the core leadership team remain intact, because they'll be able to execute the strategy in much better manner. The moment there is too much change in the key personnel of the management team, that means someone new will come. He will come with his her or thoughts, and then basically the complete strategy will go a little haywire. So it's the moment you see that CFO has quit, company secretary has quit, auditor has quit, there is a lot of churn within the independent directors, I would prefer to get out of that. Come what may. Whatever the company may be, whatever the pedigree may be, whatever the group may be, as far as that company is concerned, I would prefer to get out of that company. So that's an exit strategy number 5. Exit strategy number 3. When there is a smell of corporate governance, even though it may be just an allegation, nothing may have been proved, and yet I would still suggest you get out of that. If you remember 1% beverages, the management came on the TV channel saying that I've done nothing wrong. No problem. But the script did it bounce back? The idea is no. Vakrangi. Has that happened? No. Financial technology, that National Stock Exchange episode, the management said nothing has been done wrong. But the scribe, in fact, if I tell you, there was an argument with me, one of my previous organization, someone who had invested very significant amount of money in financial technology at that point of time. And this NACL scheme came to the limelight. And this gentleman was trying to convince me, okay, hey, Sunil, how can this company share price can go down? Because उसमें जो cash and bank balance है ना, वो उसके market cap से ज़्यादा है. That was his level of argument. Okay, and I told him, Sanjeev, his name is Sanjeev actually, and I told him, Sanjeev, you may be right, or you are right actually. But what I've observed is that the moment there is a smell on the corporate governance, now people don't look any financial numbers at the face value. Then the people will come with the question also whether the cash and bank balance that has been shown in the books are also right or not. And this company, if you see, company fallen substantially despite management saying that they did nothing wrong. Am I right? Fox and King is another classical example, Peter Kerker, where initially everyone thought that there is nothing wrong. And what happened to that company? So even nothing, it's normally thing, it's very difficult to get through. But the very fact that बोलते हैं ना आग नहीं है लेकिन धुआं है ना तो भी आपको निकल जाना चाहिए. So don't wait for the fire. Even if you can see that dhua is there, please make an exit from that company without any delay. Pointer number 7. The company that normally commands a rich premium. So there are many unique companies, am I right? Like for example, Zomato is a very unique company. There is no other Zomato that you can buy in the market. So suppose if you have to play with the new technology theme today in India, you have no choice but to invest in Zomato. Am I right? Something very similar with Westlife Development. Westlife Development, same company that basically has a distribution rights in the western part of India and southern part of India for the McDonald's brand. Okay, that is QSR, a quick service restaurant. Now today you have many companies like Burger King. You have Devyani International today now, which is listed, so and so forth. So now you have then we have of course Domino's Pizza, which is nothing but the Jubilant Foodworks. But there was only one company. So what happens? That company commands a very super duper premium because then you are playing that theme, and that you are playing that theme to a proxy of that particular listed company. Okay, but the normally that the competition start coming in, not competition, but the new companies start getting traded on the market. You know, the couple of companies start get traded in the market, then no longer that company will command that unique business model premium. That premium will start shrinking. If you remember PVR, when it got listed, it used to come at a very rich valuation. Of course, today also it commands a rich valuation, but the novelty factor went away. Of course, then we don't have many now in an exhibition business. And exhibition business itself has taken a little beating because of the COVID-19 situation. So the point is that the moment there is more than one company available within that unique business model, probability is very, very high. The first company that used to command that premium will not make that kind of a premium. Hence, you should revisit your reason to continue to hold that particular company. Pointer number 8, when the hike in the remuneration of the top management is higher than the common employees, it's a very serious corporate governance issue, my dear friend. And if that happens, I will not be comfortable. That also gives an indication that this company is not able to retain the right employee. And due to that, going forward, this company will start reporting lower and lower numbers. So don't take any of my words at the face value. Look at some of the best highly paid management. Okay. And look at the growth that has happened in the company. You will see that growth has not happened, but this company management continues to enjoy very high salary from the company. Have they given capital appreciation to the investors? The answer is no. The answer is no. So that's another pointer. Pointer number 9, when there are too many related party transactions. In fact, when you enter also in that company, you should always look at related party transaction. So if you see that this company, sometimes what may happen, the related party transaction may be low when you invested and suddenly start increasing. it's a red signal. Get out of that. But if the company is anyway having a very high related party transaction, in fact, you should not enter only in that particular company, because that's high possibility that company will somewhere either allocate or under allocate or over allocate the profit based on the market sentiments, and promoter can basically play with that kind of numbers to fool retail investors. Pointer number 10, when too many group companies in the same line of business, and again, I'll give you a very classical example. I was reading one prospectus when recently some company came out. I'm not able to recollect that company, which company was that. But the company which is going public has a business. At the same time, promoters on their private capacity also have a very similar kind of a business. And I was just wondering, how can I take these promoters at the face value? How do I ensure that best of the best deal will come to the listed entity and will not go to the company which is privately owned by the promoters? I will not get. The moment you see that is happening, so suppose I'm manufacturing a steel company, okay, I'm still an listed company, and then I say the promoters are also setting up their own steel company in their private capacity, I will not get comfort level. I'll prefer to get out of that company immediately. So that's a pointer number 10. Pointer number 11, when there is a constant dilution in the equity capital of the company. Okay, and if you look at it, the best well-trading companies are those companies which have never diluted their equity capital. That's a common theme. आप देख लीजिए कोई भी company का. On the contrary, today because of this buyback, some of the best well-trading companies are those companies who have reduced their equity capital by buying back shares from the public. Classical example has been Alok Industries. If you remember Alok Industries balance sheet, every year Kejriwal would see that, that's the promoter of the company, would see that there is a constant dilution in the equity capital of that company. And if that happens, that company will not, most probably the high probability is very, very high, that company will not make money for you. Okay. Pointer number 12, when there is a wrong capital allocation or acquisition of an unrelated business. So, I was listening to yesterday that someone basically want to go very big in a real estate, but that company does not have any company business model is a apparel business. And I was just wondering why should that company should go into the real estate. I clearly see this is unrelated diversification. Management may not have the bandwidth, and if the management is not going to have a bandwidth, then a lot of the business will not do well. And if the business not going to do well, how would the shareholders will make money out of that? At the same time, I've seen some companies doing a wrong capital allocation. They are into one business and they are going into some kind of a backward integration. It may be for the business, but if that business, if you are getting that raw material at a very cheap level, why do you need to go in that kind of a business, a backward integration just for the sake of going backward integration? So I personally, that is also, it's like if I'm a publishing house, if I'm a Times of India, and say I consume a lot of paper, and hence let me put a paper plant. Will that make a sense? Answer is no. But right, because that's a completely wrong capital allocation. The business that we are running has a different kind of a margin, different kind of a return on equity. And the business which you are going into may have a very different, like I'll give you a classical example, which we were having Balkrishna Industries as a stock of the month. And this company decided to set up a carbon black plant. And the carbon black plant, not only for the self-consumption, they said we'll also sell it in the open market. And company wanted to spend a huge money. We clearly thought it's a wrong capital allocation that company is doing, and we advise exit from that particular company. So market don't like when someone announces a wrong capital allocation or they acquire something which is unrelated to their core competency. Pointer number 13, when company acquiring a much bigger company than their own size, which has happened in the past, and it can happen in the future also. When this happens normally, when market is the peak of the cycle now, not each and every, but most of the promoters having a lot of overconfidence. And they think अगर ये company है ना, now I can manage this company much better manner. Okay, I can manage this company in a much. I can now expand my business. I can acquire some big company. Now it may not be in that DNA of that promoter to manage that larger size company, and due to that, that the burden of that larger size company will make this company also collapse. And that has happened not only in India, also globally, when someone acquiring a much bigger size company, not able to scale it up, and that company basically run into a problem, or the promoter run into a problem. So that's a pointer number 13. So whenever I see that some promoters are announcing a acquisition deal which much bigger than theirs, I would prefer to make an exit. I will get more comfort level than investing in some other company and live a more peaceful life, rather than having a tension whether this company will be able to maintain that kind of a growth in that or not. Point number 14, when the debt of the company rises faster than its profit, in other words, this company is borrowing too much money, and if that is going to happen, this company eventually will run into a problem. And that's where I will prefer to get out of that company. These are all the pointers I'm giving you. You can apply based on your comfort level. Pointer number 15, when 2 consecutive quarters, the profit of the company declines, that means it's a bad sign. And if the industry is doing good, and this company's numbers are, that means this company's strategy is going completely haywire. Please get out of that company without everyone thinking about it. The classical example is with Maruti Suzuki. Maruti Suzuki came out with the numbers 2 consecutive quarters. First time they say there is a flood in Kerala, and that's why numbers are not good. And since then, after touching 10,000 rupees, Maruti has been on constant decline. It has never touched back the 10,000 rupees. While the overall market touched all-time high, but Maruti price continues to remain little low. So I would prefer to get out of that company. 16, which is more relevant as of today, when commodity cycle, when the price are touching many years high. In other words, the upside potential of that commodity price to move further up looks little doubtful. And if that is so, maybe you should get out of that. My first pointer number 1, when everything is going good, in commodity cycle, everything is going good is when the prices are touching many years high. And if that happens, it's a time that we are very close to the peak, if not at the peak. Now, after understanding the 16 pointer, which I've suggested you for the company level, let me explain you now sector level exit strategy. There are 3, this one. Number 1, when there is a consensus among fund managers and analysts that this sector should do well, please get out of that sector without a blink of an eye. So if you happen to read, watch, or listen, if fund manager after fund manager saying that no, we think IT should do well, I'm just giving an example. Please get out of that sector immediately, or reduce your exposure. If you don't want to get out 100%, please reduce your exposure from that particular sector. Again, in January 2020, I was attending one analyst meet of SBI card, and while during discussion, there were many fund managers who had also come in this one. We were discussing, and everyone saying, if Indian economy is to grow now, the banking has to grow. That was the common theme that everyone was giving gyan on. And at that point of time, I thought, I think it's the right time to get out of the private sector bank. Now, you'll be surprised to know that since January 2020 till 30th September 2021, the sector which has performed the worst is private sector bank, which is just gone up by 14% or so. That's it. Okay. So when you see this is happening, please get out. Number 2, pointer number, when most of the players in the industry announce capex, what would mean? That means everyone is thinking that the future growth will be robust, and hence due to that there will be an overcapacity in that industry. In overcapacity, you know what happens. Overcapacity and financials have an inversely proportional relationship. Am I right? If there is a higher the overcapacity, the poorer the financials, and vice versa. And that would happen. So pointer number 2, when each and every player from the industry says, okay, we are going to do capex, we are going to do capex, we are going to do capex because we see the robust growth. it gives me a little discomfort level to me. Pointer number 3, when many mutual fund houses will come out with that particular theme to write that theme. For example, in 2008, each and every mutual fund house came out with the infrastructure fund. Am I right? Because that was the theme they wanted to, and that's a very sign that means that particular sector is top. Somewhere in 2000, maybe 13 or 14 or 15, I'm not able to recollect. Most of the fund house came out with the pharma fund. Because that time pharma was doing well. And that happened, that means that pharma sector then picked and then started underperforming very significantly. Am I right? And something similar will happen with mid-cap and small cap. Okay, when if you see some of the players will come out with the mid and small cap, it's a time for you to get alert and get out of even from the mid and small cap. I'm giving you, it's a more of a sector and thematic. That's a pointer number 3, 1, 2, and 3. Now let me go to the market level exit strategy. Okay. When the pointer number 1, and I think the very critical factor you must remember, we must have all heard about meltdown, am I right? There is another word called melt up, and you can Google search that. What does this melt up means? Melt up is that when market surges too fast in too little period. That means market has formed the top. Market has stopped from the top. For example, I'll give you 2 examples. In 2008 rally, the market went up by 54% in 5 months. From August 2007 to Jan 2008, the Sensex went up from 13,000 to 21,000. And that means that is the peak that market has had. So when you see similar happening, going forward, it should alert a red signal in your mind. And something similarly happened in June 2000 Y2K rally also, where in June 99 to February 2000, the Sensex went up by 60% in 8 months. And if that happens, see, remember, of course, you need to also look at it, whether the market has corrected previously or not. Like someone would argue that has happened in 2020, then why don't you think so? But what has happened in June 2020, we also saw the major corrections happening. Am I right? Market going down by almost 50% in 1 month. So you need to factor in that also. So, but if the market is, so what happens if the market is rising? The last leg of the bull rally is always the steep one. I again repeat, the last leg of the bull rally is always a very, very swift, very fast, very quick. And that gives an idea that time has come that I should revisit my assets allocation strategy. So that's a pointer number 1. Pointer number 2, when the inflation and the rate of interest start going up continuously, at least for a year. In other words, the India borrowing cost will keep going up, the input cost will keep going up, and due to that, the margin will come under pressure. And the moment the margin come under pressure, market will not be in a position or will not be willing to pay that kind of a premium to that particular company. So if these 2 things happen, please get out of the market. So right now, we are in a very good situation where inflation is, of course, inflation started going up, but the rate of interest is continues to remain benign. If that also starts going up continuously, that could be the first danger sign for the equity market. Pointer number 3, when almost each and every company announces big capex or acquisition. When I say each and every, maybe 2 out of 5 companies, that is 40% announce, okay, we see a growth future, we want to spend money, we want to be future ready, so on and so forth. That is the sign. So for example, if you remember, in 2008, Tata Steel acquired Chorus. Tata Motors acquired JLR, the Jaguar Land Rover. Aditya Birla Group Hindalco acquired Novelis. And that was a clear-cut indication that market has picked at that point of time. So if you see something happening now going forward, it should send you an alert in your mind. And then you should be able to relate. Sunil Damania on 6th October did suggest something on similar line. Should I not revisit my strategy? That's what should happen to you. Pointer number 4, when general interest magazine, like India Today, Open, Outlook, start doing cover story on the rise in the stock market or Time magazine does in US, then it gives an indication कि भैया बहुत हो गया, अब मार्केट में अभी आगे जाके तेजी नहीं आने वाली है. So that is another indicator. These are all the pointers. I'm not saying okay it will happen, but there's a fight already that will happen. Another pointer which I have observed historically, whenever mid and small cap company accounts for 17% of or more of the overall market cap, I think that's the time does give an indication that a lot of small cap and mid cap has started going up, which is a danger sign. Which is a danger sign, and you should make out. I think right now it's near about 9 to 10%, if my memory serves me right. We are nowhere close to 17%. Or when the pointer number 6, when the poor quality companies starts being, there was in the market, people used to say, "Kachra company jab chalne lagti hai na," you should be very, very careful. You should be very, very careful, and you should get out of that company market immediately. That gives an indication that we are at the last leg and very feeble leg of the market rally. Okay, and market at all has any direction, that is down. Point number 7, when retail investors does start justifying that why market will move up. So today, many of you would argue with me that no, market में बहुत तेजी नहीं हो सकती, अभी मंदी आएगी, which is a good sign for the market. The moment you say things start believing that market में भी तेजी है, कोई रोक ही नहीं सकता है, that's a dangerous sign. So when retail investors justify, so today a lot of investors who are attending this webinar are also a little fearful, am I right? So that means market में मंदी नहीं आएगी. The day every one of you start thinking that market में तेजी will sustain, that's a reason, that's an indication that market is very close to peak or is already peaked. Either of that. Now, why investors normally were very poor? So this is done. The 26 ABs to help you understand. Okay, reasons why investors fail to sell stocks. You know why? And I'll give you some of the psychological reasons. कभी आपने सोचा है why you have not got out of a company despite you had enough indicator coming in that you should get out of that company? Still you don't do that, am I right? I'll give you reason after reason. Reason number 1, there is a lot of noise in the market that particular company will do well. I'll give you a very classical example. A friend of mine who had invested in PC Jeweler, and I suggested, please don't invest in PC Jeweler. He said, market में सभी expert बोल रहे PC Jeweler चलेगा, and hence नहीं बेचेगा, नहीं बेचा उसने. That's why. So when there is a lot of noise that this particular company will do well, somewhere you will also want to be part of that this one, and hence you want to listen to that noise that is happening in the market. And even though you want to book profit, you will not hesitate to book profit. Why? Because कोई expert बताया नहीं चलेगा, and that's why you will miss out. Reason number 2, you have a big fear. What if the company goes up after I get out of this? Remember, that can happen with any investor in the world. Warren Buffett came out in somewhere in, I think, March or April or May 2020 from all airline stocks. He was invested and he moved out of that, and airline stocks gone up substantially high. So this can happen to the best of the best fund manager in the world. And remember, don't be under the wrong impression that you will always be able to get out of a company always at the top of the price. It is practically not possible. जिस दिन आप समझ दो कि दिमाग में कि practically possible है ना, then that fear will go up. Let the company go up. The share price goes up after you sell. Anyway, you are investing in some other company. If that company also start doing well, how does it matter to you then? So please remove that fear that if what happens if the script will go up after I get out of this. Reason number 3, you does not have a stomach to book losses. Normally, investors become a very long-term investors when it comes to booking losses. That he will continue to hold a company which is making losses for him for a longer period of time. So you should start creating an habit even to get out of a company, even if you have to book losses. Do not hesitate. Best of the best fund manager book losses. So don't be under the impression that how can I? There is उसमें कोई आप कोई नीचे नहीं हो जाओगे अगर आप आपने लॉस बुक कर लिया तो. It happens with everyone. It can happen with you also. It happens with me also. I also book losses. There is no harm in that, booking losses. So reason number 3. Reason number 4, when you think, because you have seen, you bought at a very low price, okay, and the scrip has gone up substantially. Now you see that वो scrip गिरने वाला है, but what fools you in your mind, अरे मेरा तो purchase price बहुत कम है ना, but that doesn't mean that you should not get out. If you are making a very good money, you should might as well book profit, isn't it? Why should you not get out of that company and book profit? Don't make your purchase price is too low, and hence even if the scrip is come down, मुझे क्या फर्क पड़ेगा? भाई तुमको फर्क पड़ता because you are losing your profit. Am I right? So don't do that, because I was talking to someone. He said my purchase. One of the investors who was attending our webinar, and he is from Canada, and he said, and I was making a statement. I was not aware that he is there attending this, and I said that the prices of in Canada, at least in Toronto, the real estate price may come down. Then his statement was very simple. My purchase price is very low. But I said, if that is low, it's all the more reason that you can book very substantial profit. No? But it's because your price is very low, purchase price is very low, you don't make an exit is a wrong thing to do. Reason number 5, when you have seen the company touching a new high or all-time high, and that fixed in your mind, and due to that you live in that hope that company ka ye price pe main bechunga, and that's why you don't make an exit. Reason number 6, there's a lethargic attitude, and that's also happened with me. I'll give you an example. Despite the facts known to you, I'll give you a classic example. I was owning Surat Diamond. I continue to hold in my portfolio. The company got delisted. This company's came out, and I knew Mr. Mehta, who was the promoter of that company. Okay, and when the scheme hit the headlines, I thought, मैं बाद में बेचूंगा. And despite knowing that this company will keep falling, and eventually got delisted, my value becomes 0. But at least I could have booked at least losses. At least I could have got some money. Am I right? But my lethargic attitude did not help me to get, despite a very obvious thing that this company is not going to do well. So that due to lethargic attitude. So it is in your interest, my dear friend, that you follow exit strategy in a disciplined manner to create wealth for yourself. Because ultimately you are here to create wealth, and please remove that casual approach, hota hai, chalta hai attitude. If you are very sincere about creating wealth for yourself and for your family members, if you really want to give a very comfortable or a luxurious life to yourself, you need to give some time to your equity investment. Otherwise, my request to all of you, please put your money in a bank FD and live that miserable life forever in your life. Because उसमें कैजुअल अप्रोच चलता है ना, क्या फर्क पड़ता है? 3-4 टका ही तो लेना है अपने को, क्या फर्क पड़ता है? Live that life. But if you are sincere about creating wealth in the equity market, then casual approaches, please do not take that casual approach in the equity market. Now, since all of you are attending this webinar, I have a special offer for all of you, only for all of you, not for anyone else. Okay. If you go to Markets Mojo website, the price for 2 years Mojo professional subscription is 39,998. Since you are attending this webinar, I am offering you 2 years Mojo professional subscription at 19,999 for 2 years. Of course, this does not include mutual fund. If you want mutual fund section also available, then you have to pay only 24,999 against 39,998. Now remember, this link which Suprit is going to provide you is not available on the website. This price is not available. Only through the link which Suprit is going to provide you, you can avail the offer. 20,000 rupees for 2 years works out to 10,000 rupees per annum, which is works out to 800 rupees per month and less than 30 rupees per day. Now you decide whether you want to, can you afford 30 rupees per day to create wealth or not. And whatever exit strategy that I was explaining about you, Markets Mojo one way or another way, do follow this, help you to create wealth from the equity market. So with this, I'll open the floor for question and answer. Over to you, Suprit.
Thank you, sir. I've dropped in the links for the subscription packages. Yeah. Taking the first question from Mr. Marina Patra. I have purchased Reliance share at rupees 800 per share. I have 544 shares. Should I hold or should I sell it?
I think our score suggests hold right now, sir. So you can continue to hold Reliance Industries. the moment it goes to sell, we would advise you to get out of that company, sir.
Taking a question from Mr. Dilip Kharade, kindly let me know what is the difference between a sell and an exit?
Both are same, sir. Sale and exit is same. Both are same. There's nothing, I just, there are different words that we use it, that's it. But both are same.
Question from Mr. Rohan, any price-based tips on exit strategy?
Sorry, what is it?
He wants to know if there are any price-based tips on exit strategy.
There's nothing called price-based. I gave you at the company level the formula to look at it. The moment that kind of things get triggered, you should basically make an exit. The 16 criteria I gave you on that. So whenever that any of this get triggered, you should get out of that. Do you still get the noise, background noise in my this one? It's gone. Supreet?
No, now it's fine.
Okay.
Taking a question from Mr. Rajesh. Sunilji, I am a Mojo professional member. My question is about Radico Kaitan. Radico Kaitan. It's in my portfolio since 2016. At 1st October, your mail suggested your call on that. Your mail suggested me that your call on Radico Kaitan has changed to hold from buy or consider switching it to a higher rated Mojo stock, and the Mojo score was 64. That day, its price was 883, and only 6 days now. Today, the Mojo score is 71, and it shows to buy. So, what is your main approach to the stock, financial or technical? I'm very confused on this.
Oh, that's a very good question, sir. So I think the question that you have may also be bothering some other investors also. So I am happy that you raised this question so that I can address other people's query also by answering you. So remember, it says hold. It doesn't say it says get out of that Radico Kaitan, am I right? So I've given you a formula. What happens? Whenever any company score goes below 60 and the script is falling, you should get out of that company. If any company score is close to 60 and it's going up, you should not get out of that company. So apply that formula. So same logic, you should also apply the Radico Kaitan also. So see our score now coming back to your question about why does the score, how did the score change? Score did change because of the technical factor. Am I right? So what happens? So we use it 4 dots: quality, valuation, recent quarterly financial performance, and the technical. And based on these 4 dots, we derive a score of the company. And based on that, our score can move up or move down. Now, in this case, especially in Radico Kaitan case, I think the technical factor would have undergone change. And due to that, the company basically moved in a narrow band of 64 to 71. That could have happened, explained. As I speak to you, I can see the technical indicator of this company moved from mildly bullish to bullish on 5th October. That is day before yesterday. And that's why the score basically changed to 71. So remember, hold is not a sell. Hold is a sell only when it's very closer to 60 score and the script is falling. Or the score is 60, very close to 60, and it is rising, still you don't have to get out of that company. I hope that's very, very clear to you, sir.
Okay. Question from Kishavan. Hi, Sunil. I am now with 25% profit in an investment period of 1 month in Camlin Fine Sciences, Tinplate, Phenolics Industries, and Man Infra. Should I book profit and exit the stocks?
So my request to you, please use our score. If you remember, Phenolics Industries is our Mojo stock, and it has given very good returns. I'm not very sure about Man and which is the other company. I forgot that, but I would suggest you, sir, you please follow our score and take score to help you decide what you need to be doing. Again, when you look at the score 60, even though it may say hold, but if it is going down, don't get out of it. And if it is going up, if it is going down, please get out of that. And if it is going up, then please continue to hold.
Okay. Question from Ms. Lakshmi. Hi, Sunil. I sold ICICI and Tata Consumer from my holding. Now I have 5 lakh cash in my portfolio. Can you please suggest 2 best replacement stocks to buy as of now? I'm confused on choosing from the top stock. Any sector that you can suggest me?
Sir, can I suggest you very simple? please make a model portfolio out of that based on your risk appetite, moderate, aggressive, or conservative, whatever your risk profile, and follow model portfolio. Because what happens, sir, when you look at stock to stock, sometimes the one stock may do well, two stock may do well, but that's not the right way. The portfolio approach is the right way, because ultimately, best of the best investor will go wrong in couple of companies here and there. Am I right? And due to that, your journey should not be unpleasant. That's why I would suggest you please follow model portfolio, and that's the way you should invest that 5 lakhs that you have by selling ICI and the Tata Consumer Product.
Question from Mr. Mahendra. I am a new Mojo subscriber. I have one portfolio. I want to know how to create another portfolio.
So you have a model portfolio, you have a portfolio only?
No, he just has mentioned that he has one portfolio and he wants to create another portfolio.
So very easy. Go to a website. No, you have to create another portfolio. So you go to a website and okay, let me help you with that. So you have a portfolio here. Okay. You have a portfolio, am I right? Go here and you can create one more portfolio here. So more, you go to more section. Okay. 1 second. Stock of the, okay. Now add account. You can add one more account and you give a name, whatever the name you want to give. And you can create one more portfolio here, and you can start taking that portfolio here. If you are referring to model portfolio, go to Marcus Mojo website, model portfolio, okay, and then you click on view all portfolio, and then you can create one. So already created 5, so I cannot create more. But if I can generate new. Here you can click generate new, and you can create one more model portfolio. This is the way you can do that, sir.
A question from Mr. Vineet. What are your views on Shanti Gears, as it is a subsidiary company of Tube Investment? Can we invest in Shanti Gears?
So again, I suggest you please look at our score. As I speak to you, the Shanti Gears score is hold. Okay, and the script is neither up, like in 3 months is up by 12%, in 6 months up by 26%, outperform the market. In 1 month it is down, but today it is up. So maybe you can hold, sir. It's not a buy. Shanti Gears is not a buy. But I think I would suggest that why don't you want to invest a Tube Investment? Because ultimately, if Shanti Gears has to do well, somewhere it will reflect in the price of Tube Investment also, na, sir? Because it's a holding company, and today Tube Investment is up by 3%. So I would suggest please buy Tube Investment as compared to Shanti Gears, because Tube Investment is a Mojo stock.
Okay. Question from Sumit Agarwal. Sunil Bhai, thank you for educating investors on exit strategy. While Markets Mojo method is IP-based methodology, while many of these pointers involve human judgments. So following IP-based methodology, stock may be scoring high, but analysis on exit points. One should consider it an exit from a stock, or what to do?
No, the question is not clear. What is the question? Suprit, if you can don't mind.
I believe what he's mentioning is that our method is IP-based methodology, while various other points may contain human judgments. So since our method is IP-based, and if it is telling that the stock score is high, but analysis on exit point is considering exit from a stock, should we exit from the stock or not?
Yes, you should exit. And Suprit, speak little slow, my dear friend. You are going too fast, you know. So Aram say, baat kijiye. Yes, you should exit. So see, our IP, my dear friend, we have taken into consideration a lot of parameters, and we have fine-tuned our exit strategy in such a manner. Of course, we don't claim that whenever we recommend exit, the clip will fall from next day. But what we have devised a strategy that 80% of the time we would be right in terms of giving an exit strategy. So please follow our exit strategy. Some of the pointers which I've suggested here in my presentation are already built in our exit strategy. So please do follow that without any hesitation.
Okay. Question from Mr. Ajay. Does, according to pointer number 1, we need to be cautious on companies with high Mojo score?
Not really. No. Why do you think so? See, if you look at my point number one, what does it say? Point number one says that best time to exit when the company, everything is right. Am I right? And there are many mojo stock which has created 500% return, 600% return after becoming a mojo stock. And in fact, that time no one was talking about it. Like for example, when we recommended Mastek, Mindtree, I distinctly recollect some of you basically had an argument with me. Am I right? When I recommended All Cargo Logistics, that this company is going for voluntary delisting. How can you recommend us as a buy? And I said, please go ahead and buy. Okay. And you know what has happened. Now, someone I distinctly recollect when we recommended to, I had a very, this gentleman lost his school. And I'm talking about somewhere in April or May. And of course, I can understand because he was also a little frustrated because he lost big amount of money in the stock market because market had crashed at that point of time. And there was a completely gloomy and doomy kind of a scenario. He said, how can you ask us to buy alkyl amines and Deepak Nitrite? We asked him to buy IndiaMart Intermesh. And he said, how can, that was a mojo stock. I'm giving an example, April or May 2020, maybe 1 month here and there. He said, how can you ask us to buy this companies? Chemical company ka production ही बंद हो तो chemical कौन लेगा उनका? His argument was that. Then he said, IndiaMart Intermesh का अगर it's a B2B marketplace, सबके धंधे ही बंद है तो कौन करेगा खरीदी और कौन बेचेगा किसको? और वो बेच भी दिया तो who's going to supply the product to them because the transport is down? And I requested him with the folded hand at that point of time, please follow our advice in a disciplined manner and you will make money. He did not. I'll tell you that also. उसने नहीं सुना हमारी बात. Okay. And he admitted that 15-20 days back to me. Said, Sunil, had I listened to your advice, but my ego came in between. Okay, and I did not listen to you. And I missed out very big opportunity of making very good money. So in fact, our mojo stocks are a first pointer that best is yet to come. Not when all good things are. Otherwise, we will not be having an 80% success history. Am I right, sir? If you look at the stocks, and we display our mojo stock performance live on our website, am I right? We don't hide when we have gone down also. And you can see 80% of the time our mojo stocks have given bountiful of returns. Someone giving more as 500% return, 400% return, 300% return in less than a year. Had that been the case, then script would not have gone up. So I hope that's clear your doubts, sir.
Question from Rohit. He wants to extend the package of 19,999, but has a question stating that I am a Mojo professional customer since last month. So let's say if I am extending the offer again right now, will I get a technical product in the current subscription which he was?
Yes, sir. Technical product, you will definitely get it. Not only the current subscription, even in this 19,999 and 24,999, both the packages do have a technical in that. So if you make payment now, you don't have to bother. It will be available in your package in technical products.
Question from Sanjay. I bought CDSL in July and since then the stock is continuously negative and currently the stock is down by 10%. I have been holding on to the stock for the last 3 months with the hope that the stock price will improve and I can break even. What should I do now? This stock is 8% of my total portfolio.
My request to you, sir, please continue to hold. Forget about breaking even. You will make money from this company, sir. Jot down my words. This company is doing very well. We are confident this company will offer capital appreciation. So please have patience. You have hold on for 3 months. Please continue to hold. I don't know what price you, because when I see 3 months here, it shows me maybe your date and my date may be a little different because you may not be exactly 3 months. But if you can see CDSL, in 3 months, it's up by 26%. In 1 month, it's up by 7.6%. Okay, they're very confident this company will make money. So don't worry, forget about breaking even. You will make money. You will take home money from this company.
Question from Mr. Vikram. Great insights, Sunilji. Could you please throw some light on the current stage of commodity cycle, as many mojo stocks like Grasim, Hindalco, Vedanta are commodity stocks?
So they are, you are right. One way to look at, is all good things are priced in? The answer is no. Why am I saying so? So when you look at this commodity cycle, na sir, Commodity cycles are don't run for 3 months, 6 months, and 1 year. When they change for a couple of years, and it's very highly likely that they will continue to perform well for at least for a couple of years. So right now, I think there is enough scope for many commodity to keep moving up, and up before they can hit the peak. If you remember, in 2008, crude touched $150 per barrel, if you remember that. Today we are in 2021. Did crude touch that level? Have we ever seen that level again? The answer is no. But that cycle of $20 to $150 did not happen in 1 month, 3 months, or 6 months. Am I right? It took a couple of years for that to reach $150. So same way, all of the commodities that I'm talking about, steel, aluminum, zinc, copper, some of this chemical, they are all going to basically sustain for at least a couple of years. And what would happen? And at that point of time, everyone would start talking about, or they will start acquiring some company, okay? Because they will have now, they think that they can do wonders with that company, and they want to start taking over some companies with a very rich premium. And that's a danger sign. That's a sign that this sector is overrated, and you should make an exit from that. So that's what the indication would be.
Question from Mr. Naishad Desai. You're allowing 5 model portfolios. How many personal portfolios in addition that we can create?
Personal portfolios, I think you can create 5, sir. So 5 model portfolio, 5 your personal portfolio you can create.
Question from Mr. Atharv. Sir, you have made an excellent and a very relatable point, number 4, that when we purchase, price is low and we have no urgency, when we tend to stick to the company. But how to get rid of the fear that we won't be able to buy the company again at that low price again? Could you please suggest how do we know what amount of profit is good enough for us?
No. So I think there are, Atharva, you are asking a couple of questions in the same one question. Number 1, your purchase price should never be the decision factor to get out of that company or not. Why? Because you should continue to hold that company as long as you are confident that company will do well. Okay, so that is never a function of your purchase price. Am I right? ऐसा थोड़ी है कि तुमने 10 रुपए कंपनी लिया है तो वो कंपनी अच्छा करेगा और 50 में लिया तो नहीं करेगा अच्छा. कंपनी अच्छा नहीं करेगा, सबके लिए अच्छा नहीं करेगा. जो 10 में लिया उसके लिए भी अच्छा नहीं करेगा, जो 50 में लिया उसके लिए भी अच्छा नहीं करेगा. Because I'm talking about company's financials. Okay, so first thing is that your purchase price should never be the decision price to whether to make an exit or not. Point number 1. Point number 2, you are asking, what happens if I'm not able to buy the lower price, the same price again? So क्या हो गया? Suppose you bought one company at 10 rupees. That company became 100 rupees. Now are you saying that now the scrip that goes down to 50 rupees? Now your argument is that was for मेरा तो 10 रुपए में लिया था ना. What I am saying that yes, you got at 10 rupees, you got out at 100 rupees. Now scrip came at 50 rupees, and at 50 rupees price, if you think that it makes sense for me to invest, please buy at 50 rupees. Now we are getting double the quantity. Why? Because you sold at 100 rupees. Suppose you had 100 shares, you sold at 100 rupees. How much amount you got? 10,000 rupees. Now the scrip has come down to 50 rupees. How many shares you'll be able to buy now? 200 shares, am I right? So where does this question of the previous price, buy price, will you never able to buy? Remove that. Is all wrong calculation that you are doing in your mind. You should do very simple. Keep it very simple. First thing, never ever, decision to exit should not be a function of your purchase price. Point number 1. Point number 2, whenever that parameter, जरूरी नहीं है कि 100 का कंपनी 50 में को तो लेना ही है उसको. Who knows that company 50 can become 40 also, 30 also, 20 also, 10 rupees also. So a lot of people do averaging, am I right? Thinking that average 100 से 50 में अभी कितना गिरेगा. And I do classical example, Suzlon, a friend of mine who is a chartered accountant who did that. इससे क्या गिरेगा? वो 30 में भी भाव उसने लिया था 2013 या 2014 की बात कर रहा हूँ मैं. I don't know, I don't take the price, but वो 6 या 7 रुपए हो गया. And that time his argument was, अभी इससे क्या गिरेगा? And he did keep averaging it. So there is no reason why that the company you made an exit, you should re-enter. If the reasons are not good enough for you to enter, why you want to re-enter? I hope Atharva is very clear to you. If it is not, please put it. I'll make one more attempt to clarify your doubts. But remove that notion that purchase price is a decision price for me to make an exit or not.
There are two questions on subscriptions. There's a confusion over here for Mr. Bhushan Singh. He's asking that he has taken a 2-year subscription in September 2021.
Repeat. Please repeat, please.
Yeah. So Mr. Bhushan Singh has taken a 2-year subscription in September 2021, which includes mutual fund also. Now, if today I take a 2-year subscription only of 19,999 for add-on 2 years, will the current mutual fund recommendation will still be there for the 2 years, or will it lose?
No, it will be there, sir, for 2 years. So whatever you have paid till now, that you will continue to enjoy till your current subscription comes to an end. Once your current subscription comes to an end and you go for 19,999 from that day after, so for example, you've taken in September 2021. In September 2023, after September 2023, you will not be able to access mutual fund section, but all other sites you will be able to access. So that's how it will work.
Okay. And the second question to that being, Sir Sunil, will Markets Mojo inform us when everything is going right for a stock? Just give me a minute. Will Markets Mojo inform us to exit from the stock when everything is going right? It's considering your point 1.
Yes, sir. We will definitely inform you, sir, when to exit. That's the beauty about Markets Mojo. We not only tell you when to enter, we also advise you when to exit. We do webinar every day, at least twice. And whatever query, whatever doubt people have, we come and clarify that also. Our website also gives a clarity of thoughts, which company you should hold, which company you should sell, and which company you should buy. We also give you a formula when to exit from the company. Am I right? And exit call, we also advise on a model portfolio also. We have a very powerful tool called Portfolio Optimizer, which you can run on your existing portfolio, which will help you to understand which company you should continue to hold and which company you should make an exit from. So that is also possible. So there are various ways Markets Mojo helps you to exit from a stock.
Okay. This is a question from Mr. Ashok Birbal from the YouTube chat. All the 3, that is model portfolio, stock research, and portfolio advisory, are they available in the offers that you're giving right now?
Portfolio, model portfolio, portfolio advisory, yeah.
And stock research.
Yeah, everything is included. So in 19,999 for 2 years, only mutual fund is not included. Everything else is included. In 24,999, mutual fund is included. Over and above what is included in 19,999.
Question from Mr. Vinod. What is your opinion on the entry of JSW and Grasim into the paint sector?
So Grasim paint business will, they will start selling, Grasim will start selling paint only 2 years down the line. They have not yet even found the place, land to set up the plant. So 2 साल तो लगेगी minimum, sir, उनको Grasim को paint बनाने के लिए. JSW could pose a lot of challenge to the incumbent players, but I believe there is a huge demand for paint के लिए. Why? Because today people, so previously I just didn't recollect, if you were to ask someone, and I'm talking about previously in the sense that 20 साल के पहले की बात कर रहा हूँ, if you ask someone, how often do you repaint your house, that person would say maybe once in 10 years. Okay. Now today you ask someone, how often do you repaint your house? Maybe 3 to 4 years, or maybe maximum 4 to 5 years, not beyond that. Am I right? Not only that, number of houses in the country are increasing. Because previously people used to believe in a joint family. Now people want to live in a nuclear family. So when the number of houses increases, demand for paint will increase. Third thing, people's ability to spend money has gone up substantially because of better standard of living. And that is also increases the demand for the paint. So I believe there is enough scope for 2 more players to come in, whether it's a JSW paint, whether it's a Grasim paint, to come. And at the same time, the incumbent players also understand, like Asian Paints, if you remember, they are also going out, they are diversifying the product profile to the adjacent sectors, you know. So Asian Paint has taken over slick kitchen. So modular kitchen, they now provide modular kitchen. They have taken over sanitary ware brand, SS, that so basically what they are saying, whatever need you have for a new house, Asian Paint will provide you. And I've been informed that they have started doing their interior decoration service also now. So they will take up a contract from you. So you want to move to a house, their team will come to your house. They will give you a layout, okay, how your house would look like if you give it to us, and then each and everything they will customize as per your requirement. They will paint your house. They will make a sofa for you. They will make a bedroom for you. They will make a cupboard for you. They will make kitchen for you, modular kitchen for you, as per your approved design, and they will charge money to you. And I've been informed the complete turnaround time for that is about 3 months or so. So that's what is happening. So I think even the existing players also want to diversify their revenue stream when the new players are coming in. So I'm not seeing much of an impact to the incumbent players because of JSW group or the Grasim coming into the paint business.
A question from Mr. Bangaria. Most of the fund managers are saying that IT sector will do well. If so, is there a need to exit? Kindly explain your views on this point, sir.
So if you happen to listen to everyone that IT is going to do well, then what we are saying is right. But my understanding is a little different. If you Google search, many people are saying, no, IT sector has run up too much. Now it's a time to get out. So I don't know which fund manager. So don't make an opinion. See, when I said many, matlab not one. Many matlab does not make two. Each and everyone should be on the same page and say that IT sector should do well. So if you just Google search, as I speak to you, just Google search and you will realize how some people are saying that there is not enough scope available for the IT sector to do well. Now you can decide whether you are making a statement is right or what Google is showing you right now is right.
Question from Mr. Sridhar. Your presentation is very good, Sunil sir, but I want to clarify a doubt which I have. Do you suggest full exit or profit booking only over a reasonable rate of return? How does this strategy sit with the strategy of holding multi-baggers despite strong short-term pointers like you pointed out?
So I think the question was, should I do partial profit or 100% profit, 100% profit? So I think that's a... See, when you, if the company is not going to perform well, then that company is not going to be a multi-bagger. Like I give you an example of 1% beverages, Wakrangi. I give an example of Cox and King, Suzlon. They can never become a multi-bagger, sir, going forward. Because if you look at the reason for them to fall, is this what I've suggested, then they cannot become a multi-bagger. Then they will always be underperformer. I'll give you another classical example, which I did not mention, one pharmaceutical company called Sun Pharmaceutical. When there was an issue came up of related party transaction, that company now has not given any meaningful returns to the investors since that episode came to limelight. But so something simple. And so don't be under the impression that script will fall and again it will rise. If any of the pointers which I suggested you is getting triggered, then वो लंबा बहुत time लगेगा उसको multi-bagger बनने को भी, if it all just become a multi-bagger. And that time I'm not saying 1 year or 2 years. It may take 5 years or 10 years where the company will underperform significantly. And then you will lose patience. And then what is multi-bagger? Multi-bagger is not that you don't make any money in 5 years and 10 years.
Okay. Question from Mr. Keshavan. If one is making 80 to 100% profit in investment, will it not be a good strategy to take back the investment amount as profit and invest in a good bullish stock?
No, come again, Suprit, sorry.
Yeah, if one is making 80 to 100% profit in an investment, will it not be a good strategy to take back the investment amount as profit and invest in a good bullish stock?
So your question is not very clear to me, but let me make an attempt, whatever I've understood clearly. You are saying that you are making 80 to 100% profit in one particular company and said you should, if that is so, you should get out of that company and invest in another bullish stock. That's what, if your question is. And I'm assuming that's your question. I'm responding based on that. Sir, why do you believe that a company that has gone up by 80 to 100% will not go further? So that's why I said, see, the reason that 80 to 100% is coming because you're making your purchase price as an anchor price. 80 to 100% कैसे आया? आपके purchase price है ना? So I said, वो निकालो दिमाग में से. You should continue to hold that particular company as long as the parameter of that company are strong. In our system, Mastek has gone up by 550%, 550%. We have not asked investors to get out of that book profit. Mindtree, which has gone up by 350%. We have not asked you to get out of that company. Tamil Nadu Petro product gone up by more than 200%. Did we ask you to book profit? Answer is no. So my request to you, sir, don't make, again, I think Atharva or someone was asking me a question. I said that never ever make your purchase price as an anchor price. The moment you do that, then you will come. You should have a strong reason why you should continue to hold that company. And if the reason is continue to remain hold, please continue to hold. The moment that parameter turns negative, please get out. Then उसमें फिर purchase price नहीं दिखने का, फिर निकल जाने का 100%. So that's what my advice to you, sir. I hope very clear to you, sir.
Question from Mr. Ratnesh. Thank you for your advice and insights. What is your view about cement stocks? There are reports that the margins may be under pressure due to rising cost. Should I sell my cement stocks?
No, don't. Your fear is right, sir. That margin could be under pressure because see, remember, ultimately diesel and petrol does, whenever it goes up, it does hurt cement players for the very simple reason it's a bulky commodity, and bulky commodity requires transportation, which costs you a very high amount of money. Am I right? Second thing, cement consumes a lot of power, and the coal prices have gone up. Some of them have captive mines, but some of them don't have, and they will have to pay a very heavy price to buy the coal. So that's it. So now some of the last 2 days or 3 days back, each and every cement companies have increased their cement prices, whether it's in eastern part of the country, northern part of the country, western part of the country, southern part of the country. And there are news, of course, there are no confirmed news, but there are rumors, I would say, put it this way, that further price will get high post Dussehra. If that happens, I think we'll be able to recover some of the cost of what they've seen input cost pressure. So my advice to you, please don't get panic out of cement stock. If you look at the many mojo stock that we have, they are from cement sector, and it gives a lot of confidence to us. The cement as a sector should do extremely well.
Question from Mr. Manoj and as well as Yantullah. If I go for the stock research of 8999 plan that is on the website, will I also get a technical product with it?
No, that will not give you a technical product, sir. Even you will not get the model portfolio, you will not get the portfolio optimizer, sir.
The continuation of the second question being, I have 1 year Mojo subscription which is expiring in 2022. Please confirm whether I'll be eligible for the technical product.
So you will be eligible. So all current subscribers are eligible for the technical product. You don't have to pay anything extra. But our price will go up, sir. Once we launch our technical product, and suppose if you have to then renew your subscription, you will have to pay higher prices. Today, you are getting a golden opportunity to renew your subscription at the lower price and keep enjoying Markets Mojo for a longer period of time. So that's why I suggested that if you want to extend, you can extend 8 number of times. So that's possible. The moment we launch technical, the price of Mojo Professional will go up substantially high.
Also to Mr. Yantullah, if you want to extend the 1 year into 2 years, I'm dropping in the links again for the packages. You can click on the link and pay and it would be extended.
Yeah.
Taking in a question from Deepak, for a layman, can you please explain the difference between CAGR and annual return?
So both are same, sir. Compounded annual growth rate and annual, both are same. See, कभी-कभी क्या होता है, कोई इतवार बोल देता है, कोई रविवार बोल देता है. फर्क इतना ही है, दोनों वही है. कोई गुरुवार बोलता है, कोई बृहस्पतिवार बोल देता है. दिन तो सेम ही है. कोई सोमवार बोल देता है, कोई मंडे बोल देता है. दिन वही है. It's only different word for the same thing.
Mr. Atharva has replied with a question stating that the first question I asked of purchase was perfectly explained by you, sir. Thanks a lot for that. I have another query stating, as per your first point in market level, do you think market has surged? Just a minute, sir.
Yeah.
Do you think market has surged too fast in this financial year, looking at the past couple of quarters, or do you think the run could last more?
So what you're saying is right, that market has run up in a recent past, but you also need to factor in that market has run up after the major crash. So then you don't have to consider. So what I said is that market has been rallying. And the last leg of the rally is little steep, very fast. And that gives a feeling that now market will not be able to sustain. So if you look at, so I have given example of year 2000, I have given example of 2008. Now, what has happened 2002 to 2008, we have seen a constant rally in the market. But the last leg of the rally was very steep. Same way, the rally which started in Y2K did not start in 1999, it started in 1998. But the last leg of the rally basically was very steep. And then the market the rally got terminated. So unfortunately, what has happened in March 2020, we got a major crash in the market. And due to that, if you look at last 2 years returns from the market, it will not be very substantially high. Okay, so let me see last 3 years, what is the return in the market? Okay, so last 10 साल का market return, if I have to look at it, it's only 72%. So it's not very big numbers. Are you getting my point? Because we were at somewhere in the region of. So okay, let me put it this way. So okay, on today is the 7th October. So let me look at 7th October. What was the market in 2019? On 7th October 2019, market Sensex was at 38,177. Okay, today we are at 50. I will say 60,000. So okay, 30 and this is 39,000. I'll put it this way, okay, just for the simplicity. The market has gone up by 53% in last 2 years. 2 years. 7 October 2019 से अब तक market has gone up by only 54% in 2 years. That is not a very steep rise, sir.
Okay. There's a question from Mr. Rohit. He has a question about the technical product. Is the technical product good for good? I'm really sorry. Is the technical product going to be good for short-term swing trading?
Yes, sir. It would be good for the short-term product. Whether it be good for the swing trading or not, I'm not able to tell you right now, sir, because we are testing our product. So it will take some time for us to come back to you on this one. But it would be good for the short term. I cannot comment on the swing product or not right now.
Taking a final question from Mr. Rajendran, I am planning to take the subscription for 10 years. Can you please give me some offers on behalf of Diwali? I'm an existing member. I am planning to extend for 10 years again.
Sir, what I can suggest you, sir, very simple. Use our link, 2 years link 5 times. And that's the best way you can subscribe to it. The 10 years, sir. This is a very good link. This is a very good offer. Remember, sir, our price will go up. And I'm not joking with you people. I'm serious. Our price will go up once we launch technical. And if you really want to lock in your price, it's a right time for you to do it. So you can do that immediately and extend for 10 years without any delay.
Yes, there are a couple of questions I'd like to take this about the HNI product. They need an information about the HNI product.
So we will launching our HNI product most probably tomorrow, on the day after tomorrow. Tomorrow is what? Today is what? Thursday, am I right? So tomorrow, I think we are launching tomorrow our HNI product. You can all join us in the evening. We'll be launching it.
Yes, sir. That's it for the Q&A.
Thanks a lot. Just a gentle reminder that we have a two beautiful scheme going on for 2 years. One is at 19,999 for 2 years, and another one is 24,999 for 2 years. 24,999 has mutual fund. 19,999 does not have a mutual fund. So if you don't want to use mutual fund, then go for 19,999. If you want mutual fund, then go for 24,999. Otherwise, each and everything remains the same. Thanks a lot, everyone, taking time out and attending this webinar. Thanks a lot, Supreet, for hosting this webinar. Over to you, my dear friend.
sir. I have dropped in the link as per your request in the chat box. Thank you all for attending this event. I hope you found this particular session of risk factor impressive and informative as well. I've dropped in the links for I've dropped in the links for the upcoming webinar, which is today in the evening at 7, which is an exclusive Q&A session by our leadership team that comprises of our CEO and founder, Dr. Mohit Batra, as well as our CIO, Mr. Sunil Damania. Looking forward, everyone over there, looking forward to see you there. Goodbye. Have a great day.